In this video, we're going to talk about how the financial statements are interrelated. First of all, what statements are we talking about? We're talking about the income statement. The income statement will hold revenues, expenses, gains, and losses. We're also going to talk about the statement of retained earnings. That starts with beginning retained earnings and adds net income or subtracts net loss and subtracts dividends declared. The balance sheet contains assets, liabilities, and stockholders' equity. And finally, the statement of cash flows includes activities that used or provided cash. And we'll talk more about the statement of cash flows at a later date. Right now, we're just going for a basic overview. So a single-step income statement lists all the revenues together under a heading such as revenues or revenues and gains. The expenses are listed together in a single category entitled expenses or expenses and losses. So a multi-step income statement reports a number of subtotals to highlight important relationships. Here what I have revenues, subtracting cost of goods sold and operating expenses to get our operating income, or loss if it's negative, and then subtract other expenses to get our net income or net loss if it's negative. Now that ending net income goes to the statement of retained earnings. The statement of retained earnings begins with last period's ending retained earnings balance, which is also this period's beginning retained earnings balance. We next add net income or subtract net loss. Next, dividends declared and deducted to arrive at the ending balance of retained earnings. This ending balance of retained earnings is carried forward to the next statement, the balance sheet. There's two balance sheet formats. The report format lists the assets at the top, followed by the liabilities and stockholders' equities below. This one that we're seeing on the screen is called the account format. It lists the assets on the left and the liabilities and stockholders' equity on the right. I just chose to do it on here because it fit on the slide better. Either format is acceptable. And what we see on the balance sheet, that retained earnings number there, comes from the statement of retained earnings. And then finally, we get to the statement of cash flows. The statement of cash flows has cash flows provided by operating activities, cash flows used in investing activities, cash flows provided by financing activities to give us this net increase. And then it adds that to our cash and cash equivalents at the beginning of period. We end up with our cash and cash equivalents at the end of the period. That number comes from the balance sheet, so it has to flow, it has to balance back to the balance sheet cash and cash equivalents. So that's it, we're done. This video was created and narrated by Dr. Sell-Tietz. Have a great day.